What's going on? What's going on? What's going on, everybody? I'm trying to figure out how to. Oh, there it is. I'm like, they done moved the they done moved the doggone pin comment thing. Y'all pull up, pull up, pull up. Do me a favor, smash the like button for me. I know we've been out the loop for a minute, man. We've been out, we've been out the loop for a minute. We ain't been, you know, getting our tidbits on. You know, y'all see me in the sweatshirt. It's cold in Columbus, Georgia, man. We still got options. We buy them, we sell them. Got options. We buy them, we sell them. It's cold in Columbus, Georgia, man. How y'all been? How y'all been doing, man? How y'all been doing? Uh, Before we get started, the link is in the chat. The link is in the chat. It's pinned to the top of the chat. If this your first time tuning in to Tim's Tidbit, I like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still like to say welcome and thank you for always pulling up to Tim's Tidbits. And what is this right here? This is the weekend chart prep for November the 13th, 2022. Yeah. What's up, man? This weekend chart prep. This is where we sit down together and prepare, if you will, our charts for the coming week. And sometimes we take a deep dive inside the mind of Lil Timmy Rogers. For those who don't know, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day to talk about the price action. And then Monday through Friday, we get on at 9 a.m. East Standard Time and talk about the overnight price action before the market opens. Prepare our mind for the day of trading. If you day trade, prepare our mind for, what the day is going to bring as far as price action. If it's going to give us the opportunity to enter swing trades or anything like that, then at 6:30 p.m. Eastern Standard Time, we talk about the price action recap, where we look back at that day's action and say, hey, were we correct? Were we incorrect? Did we learn anything? Did we make any money? Did we have a good old time? That's what we do Monday through Friday. And on the weekend, we get together on Sundays at 3 p.m. Eastern Standard Time, and we talk about chart prep and look at the week to come. Thank you for pulling up. I was gonna do this grand announcement of dropping the first installment playlist, if you will, of the ICT concepts videos, but y'all done ran through them. Y'all done went right through them. Y'all already, for anybody who don't know what I'm talking about, there's a link in the description below. The first link down there, it says, let me see exactly what it says. Let me go to the description of the video. Let me come to the video. Okay. That's not the video. Okay. This the video. There's a description. Let me put this on the screen. Let me share my screen real quick. Share the screen. Share screen. Add to stream. There's a link right here that says, watch the new ICT Concepts Explained Lingo playlist. That's a link to the playlist right there for anyone who has not ran through the video. I'm trying to figure out how y'all ran through 8 videos in one day. 8 videos in one day. How y'all ran through 8 videos in one day? Ain't nobody taking no notes. Ain't nobody taking no notes. Ran through 8 videos in one day. I appreciate y'all for tapping into the videos, man. But I just want to try to break it down in simple terms. And like I tried to explain in those videos, that's not the totality. What I'm designing it as, right? Because looking at the ICT videos can be a lot. It can be very, very overwhelming, especially for new or limited experience people, right? So what I'm doing with the playlist, for those that don't know, I mean, with the series is the lingo playlist. That's just breaking down the different ICT lingo that I use on a daily basis, right? Letting you know what the PD arrays are. What just understanding the lingo, right? So the next series that I'm going to post is going to be the price action series. It'll probably be another 8 videos, maybe. I don't know, because I probably won't do a video on the swing high, swing low, because the swing high and swing low, I don't actually make entries off of those. And so I don't know. We'll see how many videos it be, but now the price action is going to be well, yeah, it'll be in the price action. Strategy, it may not be now for strategy. Focus, Tim. But the price action videos is going to be showing how to go through and find them in the price action, right? Looking for them in the price action, identifying them in the price action. So you understand the lingo is understanding what they are. The price action is going to be finding them in price action, identification in price action, out in the wild, if you will, going out there with your binoculars, looking for them in the wild. And then the strategy video is going to be how to implement a strategy using a mitigation block, or how to implement a strategy using a breaker, or how to implement a strategy using fair value gaps. It's going, you know what I'm saying? So it's for people who want to understand everything, and that's not everything ICT teach, but understand, you know, a bunch of stuff to have multiple tools to pull out. And it's for people who just want to understand this one thing. Forget all this other junk. Tell me what this is. Tell me how to find it. Tell me how to use it. That's how the series is being broke down. I appreciate everybody that's been looking at it, and hopefully it's been of help. The comments I've been seeing, been saying people, it's been helping them. I was going to go through and try to reply to some comments today, but I got caught up on some other stuff trying to start editing the video for my nephew. We'll see if I ever get back to that. Now, with that being said, I did see somebody ask me if I offered one-on-ones. I think I may open the one-on-one calendar back up, but I want to provide a free resource for people to get everything they need in totality, right? I may open my calendar, now that football season is over, I may open the calendar back up for people who just want to have a one-on-one, who feel like, hey, I'd rather just do a one-on-one than to try to go through this and do that. I may open it back up, but I want to provide a free resource for everybody that's going to be there. Once I put all the videos out, once everything is out in its totality, then if people still feel like, hey, I done seen ICT, I done seen you, and I still want a one-on-one, then I may open up my calendar if people want to do it like that. But I'm trying to do everything for free so that people can have everything they need, take all their money and put it in the market. Now that that's being said, let's get to why we came here today. Oh, let me holler at, see who in the chat. We slim today. What y'all done gave up? I see somebody here. I ain't gonna call him out first. What's up here to learn to share? Yes, we are back. Guess who's back? What's up, KC? I'm your bug man. That's what I am. What's up, KC? What's up, Captain Kirk? What's up, Captain Kirk? What's going on with you? What's up, Lou? Thanks for the ICT videos. Now this will make more sense for me. Okay, then I appreciate that, Lou. Captain Kirk said I watched all of them. What's up, everybody else? Ann Robinson, how you doing, Robinson? What's up, Tranisha? How you doing? All were great. Done ran through all of them. How many notes you took? 0. What's going on, man? Ain't nobody in here today. Oh well, let's get to it. All I need is 1, unless that 1 is Robinson. Then I would need 2. Hey, let's get into it, man. Let's get into it. Let me see. What do I have open? Nothing. Since I ain't got nothing open, let's go see what's coming up on the economic calendar. Let's see what's on the economic calendar for this week. I've been chilling. Me and the family went to go see Wakanda Forever. Screenshots. Hey, that work. Those notes. Screenshots of notes. And screenshots just electronic notes. Keep you from getting writer's cramp. All good. I was up until 2. That's what's up, man. That's what's I appreciate y'all for tapping in. Hopefully, you know what I'm saying, continue to be a valuable asset to more cousins to come. More cousins to come. For anybody who don't know about econoday.com, econoday.com is my website of choice to go find my economic data that affects the market. You can also go to forexfactory.com, forex like the stuff that you trade, factory all one word.com, and you can look at the same information. It's just laid out a little different. We can go through Monday through Friday, hit apply settings, and give you the same information. All the information is in one row. You're right. It's in one column. You know what I'm saying? All the rows are set up in a column format, whereas on econoday.com it's set up across. The columns are in a row and it laid out like a calendar. That's why I like how it look on here, just the aesthetics for me. Same information on both. We got PPI coming out on Tuesday. Retail, industrial production on Wednesday, yada yada yada. Jobs every Thursday, as we know. Housing starts and permits on Thursday. Philadelphia Fed manufacturing numbers, and existing home sales. So I know we see a lot of red dots on here, but just looking at it, I think it's not a really heavy hitting news week for me. Even though we got a lot of red dots, you know what I'm saying? Because anything can give you a spike here and there. You know what I'm saying? But it's nothing that's really heavy in my opinion. The PPI, this is about the heaviest one in my opinion, because this is the what the producers pay for, you know what I'm saying, producing the stuff for us. Like we just had CPI last week. If y'all remember, we just had CPI last week, right? And the CPI came in a lot better than expected. So the market went crazy on Thursday, right? I didn't even get a chance to even, you know what I'm saying, get in on none of that. I had already cashed out, you know what I'm saying, of my calls before. So I couldn't even get in on none of that. And y'all know I try not to get into nothing right before the big news. Try to wait for the unknown variable to happen and then make my entry after that. But the CPI came out better than expected. And now, how can we use that information? Well, since the CPI came out better than expected, right? We can anticipate, not gamble and go jump in, but we can anticipate the PPI for that same time frame to be coming out better than expected, because the PPI, CPI, GDP, all the stuff lag. And if you see on next Tuesday, the 15th, we're getting the PPI information, the data from October. You see what I'm saying? So the PPI data we're about to get now is from October, right? Since in October, it was cheaper for us to, you know what I'm saying, do stuff. We can anticipate it being cheaper for the producers back then too. Will it be cheaper? We don't know. That's the unknown variable. You know what I'm saying? But we can anticipate it being cheaper. And if it does end up being cheaper, we can anticipate the market reacting to the upside the way it did with the CPI. Will it be as violent as the CPI? Who knows? But since the CPI from the same time frame was better than expected, then we can anticipate the PPI from the same time frame being better than expected. And we can start to formulate a plan. So if it is better than expected, where will the market try to go? You know what I'm saying? Where would the algos use this to push it to? If it's better than expected and we're already in a premium, or if it's better than expected and we're in a discount, or if it's worse than expected and we're in a premium, or if it's worse than expected and we're in a discount, you see what I'm saying? We can start to formulate our strategy or our game plan, you know what I'm saying, of what we want to do as far as putting on positions and taking positions off, managing positions, getting new positions after the numbers come out, stuff like that. We can start to do stuff like that. And that's on Tuesday. The rest of the week, like we get jobless numbers every week. You know what I'm saying? Jobless numbers, they be important, but we get them every week. And the jobless numbers, they've been decent. I think last week it might have went up. It had been going down. The job numbers had been going down. And then last week it might have went up, I think. Let me see. It's that Thursday job. What are job numbers at on here? That's the fit unemployment right there. Right. So, all right. So it was the same. Let me see. So on the 27th, the actual was 217, projected 219. On the 3rd, last week it went up, right? So every month it had been going down for a while. So from October 13th, it went up. The 20th, it went down. It projected. It was better than expected, better than expected, better than expected. And then last week, on the same time, we got the good CPI numbers. It was a little worse than expected. But this going up a little bit, yeah, it's bad that it's going up, but the Fed want the jobs to, kind of pull back a little bit. So bad could mean good. You see what I'm saying? So it's all about understanding the whole narrative to see how the market reacting to the good news, how to reacting to the bad news, right? So it's all about knowing what the Fed want, how the Fed, the Fed want to control inflation. So the things that they're looking at is the GDP, the CPI, the PPI, the job number, the PCE. You know what I'm saying? It's like they're looking at all that stuff. They're looking at all of that stuff, right? So it's just all about understanding where they want to push the market. I got off on a tangent talking about that, but like I say, sometimes on these Sunday chart things, sometimes we go inside the mind of Lil Timmy Rogers. So just deal with it. Hey man, what's up, Blue Eyes? What's happening with you? Let me see. Let's go on over here and look at Spalene and then start getting into doing some charts, right? We wrote, everybody already know we wrote a song for Spalene. If you don't know we wrote a song for Spalene, you want to hear it? Here it go. Spalene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you got through. As y'all see, I have not updated anything on my chart. Not a thing. But as y'all, I don't know if y'all remember when I was talking the other day on live when I was talking about this monthly volume imbalance acting as some type of support. Wasn't expecting it to act as support on Friday, but it did. See, we gapped up here, right? I think we pushed up, pulled down. I can't remember. I think we gapped up and went up and then came back down. I can't remember exactly how Friday played out, but then we came right back down to this monthly volume imbalance, and look what it did. It acted as support, and we pushed up off of it again, right? I don't have a crystal ball. All I do is read the price action, and that's what it does a lot of times. The majority of the times when you have some type of imbalance, and then once the market trades through it in the opposite direction, it on one side it acts as resistance, and on the other side it acts as support for, most PDAs, especially, imbalances, like, gaps, fair value gaps, voids, all of that. It acts as some type of support. And as you see, it acted as support on Friday, right? I was hoping that it would act as support later on, but it acted as support on Friday. Let's go ahead and mark everything on the ES. The ES gives you a more complete view of the price action. The SPY, since it trades from 9:30 Eastern Standard Time to 4 o'clock Eastern Standard Time. Like it's like a lot of price action that the SPY daily charts don't show you. And a good example of that will be, let's go in here. We're looking at, these are daily candles right here, right? If we drop down to the intraday candles, like I'm just gonna go to 1 hour, right? We're gonna go to 1 hour, right? And what was this, Friday? Let me see here. Is that the 10th? Let me see. It's one of them days. I remember I should have marked it out before the 10th. The 10th is the day. Okay, y'all see the 10th candle right here? Like this 10th daily candle. Let me put a rectangle around this right here, right? Because the SPY, it only trade from 9:30 a.m. Eastern Time to 4 p.m., right? So the candle, they be short, like on Trading View. I don't know if it's because I got free data or what, right? But like, see, I'm going to highlight this right here. And I'm going to change the color so we know which one it is. That's fine. That's fine right there. Okay. So now I'm going to go back down to intraday. I'm going to go back down to intraday. I can't get it to snap where I wanted to, but I'm going to go back down to intraday now, see where I got it highlighted, right? When I go down to the 1 hour chart on the 10th, this is the 10th. This is pre-market on the 10th. This candle right here, that's the 7 o'clock candle, meaning that candle started at 7 o'clock in the morning. That's how Trading View posted. I don't know why. This candle right here started at 8 o'clock in the morning. So all I can see is the pre-market and pre-market, the actual New York market, and the post-market on my free version, right? So for the pre-market on the 10th, this is what we did on the 10th. But if you notice, when I highlighted the 10th, right? If you look up here where I highlighted, let me move this back over here so it only shows you the 10th, right? Right there. This is up. That's the candle that started at 1600. So this is the last candle of the New York, because this candle opened there. So this high right there, that's the last candle of the New York session right there. And then coming over here at 9 o'clock, 9:30 is caught up within this candle over here, right? So that's the last candle of the New York session. That's the first candle that is inside this. The beginning of the New York session is inside this candle right here, right? Go to 15 minute. We can get right down to that exact time, right? So let's go to the 9:30 candle. Not the boom right there. That's the beginning and the end of the that's the beginning and the end of the New York session right there, right? And if you notice, we at the bottom of a wick, we at the top of a wick. That's that daily candle, right? On the what's that? But if you look, right, post market, there was some other stuff. Pre-market, there was some stuff, right? I can't see like all through the night because I ain't paying for the data. If I go to my TOS, it's got candles all through the night. Y'all, hold on, I gotta sneeze. Thank you. There's candles all through the night, but as you see, there was a whole lot going on that Thursday morning, right? That the daily candle on Trading View don't show. Where's the 10th? Where did my box go? Where did my box disappear to? Oh, it's just shrunk down. You can't see it because I got it on the intraday time frame. I got it on the intraday time frame, so you can't see it. But as you see right there, that's this dot and that dot. That's the top and the bottom of the box. It's just on that daily candle. But it was a whole lot of stuff going on all the way down below this day, if I'm not mistaken. Right? All the way down below that day. Put a line there and see. I know y'all saying like, Tim, what does this have to do with anything? Nothing. Nothing at all. But I got the mic and you don't. See, like the pre-market, it was all the way down here, all the way at the bottom of this line. So there's actually a humongous green candle right here in the pre-market that we can't see on this daily chart for some reason. I don't know why trade. I don't know if it's a free thing. I don't know what, but it's a big humongous candle right there that we can't see, which would make this daily candle come all the way down here in reality. Right? With that being said, let's go over to the ES and then mark everything out. So that's why I choose to watch the ES and I choose to mark up everything on the ES and make my decisions based off the ES, because the ES, the SPY, SPX, they all move in tandem, but the ES has all the price action from, you know what I'm saying, Asia, Sydney, Asian, London, New York. It's got all that price action, whereas the SPY and the SPX only show the New York price action. Now that I've said that 100 times and beat that horse bloody, let's go ahead and look at the ES. Why is there's nothing on my ES chart? Oh, because I got it blanked out. All right. Speaking of blanked out, since I did that, let's look at the IPDA. Let's do the IPDA look back. The IPDA, we have taken out some highs that we were watching. Let's go on anybody who don't know the IPDA look back is, this is a tool that ICT so graciously taught us. You start wherever you are, you start where you are. But I'm just going back to look at what October has accomplished from the beginning of October. Right, so from the beginning of October, October 1st, right there, boom. So from the beginning of October, we're going to try to find, in October, we had a low, and we had a high right there. Okay, so that I'm put that right there, boom. That's a high right there. That's a high right there. I'm just going back to see what we have accomplished since October 1st. All right. I'm just going back. You ain't got to like go all back like this right here, but I'm just going back. So since October 1st, why do I keep hitting cap lock? That's why ain't nothing working right, because I keep hitting cap lock. So boom. Since October 1st, we had a high there. We had a high here, and we had a high there. So the 60-day and the 40-day, the highest high was in the same time frame. The 20-day look back on October 1st, we had a high right there, and this was the highest high. All right, so this line should actually be up there. Right, that line should actually be up there. The 40 should actually be up there. So let me adjust this because I want to be correct. Okay, so that's the highest high. So that's where that should be. 20 days back. And then the 60 and 40. The 60 and 40, that's the highest high in both the 60 and the 40-day look back at the beginning of October. We had just came down and broke this low. This was the lowest low at the beginning of October for 20 days back, and that was the lowest low for all the price ranges all the way back, right? So as October began, right, we had just bounced up, and then we quickly sold off and ran out the lowest low within 20 days, right? Boom, we ran out the lowest low within 20 days in October. Matter of fact, we ran it out on October 13th, right? So from the beginning of October, from the big first trading day of October to October 13th, the market immediately took out the sell side liquidity in the for the lowest low in the entire 60-day look back, right? So now let's fast forward to after we took out that liquidity, right? So we're gonna go that's Friday. Let's go to the Monday after that, because we ran it out on Thursday. That was Friday. We're gonna go to the Monday after we ran out that liquidity that liquidity. So now the highest high after we ran out the liquidity on 20-day look back is there. That's close enough for government work. Then the highest high for I just do this right here to get my mind in the idea of like where we are. That's the highest high on 40-day look back, and we got a high there. That's the high. Now we got a high there, and that's the highest high 20-day look back. Then for the 60-day look back, that's the highest high 60 days back. Right. So after we took out that sell side liquidity, now 20 days back, the lowest low is here because we just took out sell side liquidity, had a reaction. So the lowest low is below this low at, let me get a number for those who want to hear the number, 3502 even. Right, that's the low is low for the whole 60-day look back. There's no low lower than that. 20 days looking back, pretend like y'all can't see these candles right here because those candles don't exist yet. Those candles don't exist. We're looking back, right? So we have a high right here at 38.20, right? We have the highest high of the 20-day look back right here at 39.36.25. We have a high in the 40-day look back at 41.75. We have the highest high of the 40-day look back at 42.17.25. Then we have the highest high in the 60-day look back at 43.27.50, right? We also, let me see, we went into there. We pretty much then took care of that fair value gap right here. We pretty much took care of that fair value gap in between there. It's a little bit, a little bit from going all the way up to it, but yeah, we pretty much took care of it. We got a daily volume imbalance in there. These are all the different PDub. We got a fair value gap there. We have we got an order block right here. We got a bearish order block right here. Just the different PDAs that's above price. Right, just looking at the different PDAs above price. That's what you want to do with the look back, right? The lovely benefit of hindsight. We zoom out to November, the beginning of November. So we're gonna go to November 1st, right? The market started pushing up, and we got to the first trading day of November, right? So on the first trading day of November, we took out one high that was within the 20-day look back, and we came up very close, almost kissed, waved at it really good, almost kissed the highest high of the 20-day look back at the beginning of November. And then the 40-day and the 60-day highs are still pretty much the same. Yes, I'll take some tater tots. What are you making with the tater tots?
I was going to make like a cup or something. I don't know. I was fixing tater tots. I know what I'm going to make with here.
Put up. Do we got some hamburger buns enough?
Wait.
All the iron is in the furnace. Don't let them break the furnace.
Oh yeah, we do.
I know, but I ran
Okay. Put me one of them patties in the oven. I do it. Just you go ahead and cook the tater tots. I'll do the patty. I don't like the way you said I don't like the way you said it. I don't like the way you said Okay. Okay, now we good. We good. What was I saying? I lost my train of thought. But anyway, we came to November, right? We came to November, and in November we had taken out this high. We took out the first high in the 20-day look back, came very close to the second high, to the highest high of the 20-day look back, right? And we took care of a couple PDAs. We hit some fair value gaps in this order block. We came into this order block that was within the 20-day look back, and we reacted off of that order block without taking the high, right? So we hit the order block within a 20-day look back, and we reacted off of it. We didn't take the high. So boop, the order block stopped us in our track. That was right at that breaking market structure. Looking at that order block was right in line with a mitigation block also. Yes, that order block right here. For those that don't know, this green up close candle right here, that's the order block I'm talking about. And this red down close candle right here, that's the mitigation block that I'm talking about. So now that makes sense to have come back to a mitigation block and then pull back down. That makes sense because we were in a discount, we pushed up into a premium and hit a mitigation block, and then we reversed, right? So now that we hit that mitigation block and we reversed, right, we came back down to an order block right here, right there at a breaking market structure. We have this 2-day order block that we came down into right there, right here at a daily breaking structure, right? So we came up, came down, took off, came back to the breaking structure right there at that order block right there. So came up, breaking market structure on the daily here, pulled back down to this down close candle right there, which is an order block. Pang-ow! Got the pang-ow, right? Came up, took out this high, hit this this order block and this mitigation block. Then we came back down into this order block right here, right at this breaking market structure right there. And then after we hit that, pang-ow again, not really a big pang-ow because we came up, came back down, and then came up. Because if notice, when we came back down to this order block, right, we put this, how you know stuff is fractal. You know it's fractal because these are daily candles, but it's acting out just like intraday price action, right? Let's see how it acted out just like intraday price action, right? We came up, got a breaking market structure here, pulled back down to this order block right there, took off, got a breaking market structure there, came up to this order block and this mitigation block, pulled back down, right? Pulled back down. Where did it pull back down to? This order block right here. It stopped this order block. And if you notice, this order block here came in contact with this order block here. Y'all know what I say. Whenever you have a order block trade down into an order block, when it take back off, the price is going to come back down and it's going to stop at that higher order block. And there it is right there. Stopped at the higher order block, then pushed up. Now, this order block came into that order block. Price went up, hit this fair value gap right there. And then what did it do? Came back down to this order block that had just traded into that order block that had just traded into that order block. Stack on stack on stack on stack. You see what I'm saying? Came back down to that order block. When we got the news, right? This right here, this is why you trust the price action, but since we had the news in front of it, my rules say don't get into nothing until you know the unknown variable. Shout out people. I had people that called me. I had people that inboxed me. I had people that text me that said, boy, when you told me to look at that order block we was coming down to and we was getting ready to go into CPI, I got them calls and them things went to 800%. You know what I'm saying? I had people call me, inbox me, all kind of people hitting me up. Matter of fact, the homie Zay was like, boy, you better start taking your own advice. You know what I'm saying? But it's not about taking my own advice. It's about my rules. There's been plenty times where I got burnt in front of big news. That's why it's a rule now that I don't put on no new position right in front of the news. If I'm not already in it, I don't put on a new position right in front of the news. That's just my rule. You ain't got to have my rules. You know what I'm saying? But so now back to what we were saying. Now that we that brings us to where we are now. Let's come over here and we're just gonna put it. We're gonna put the we're gonna put it on the last day we traded. Right? We're gonna put it on the last day we traded. And so 20 days back, we've already taken out the highest high 20 days back. We don't have anything but a low 20 days back. We don't even have a PD array 20 days back, right? We don't even have a PD array 20 days back. The only thing we have 20 days back is, we got PD arrays below us. We have a daily fair value gap here below us. We got a daily fair value gap here below us. All right. This other stuff, I'm just gonna delete all that other stuff, all that other TDA stuff I had. I'm just deleting it all because we're just gonna start over anew. So fresh and so clean, clean. Ain't nobody don't ask me. So fresh and so clean, clean. What's next Friday, the 18th? Oh, we are the coolest motherfuckers on the planet. My mind. Ooh, ooh. All right. Daily bullish fair value gap. Daily bullish fair value gap. Okay, so we got a bullish fair value gap below us. We have a mitigation block below us, a daily mitigation block below us. Since it's right by the fair value gap, I really don't want to mark it up. I hate when it be overlapping stuff. Just be, what did I just do? So bullish mitigation block. I don't have anything on here for mitigation blocks. Breakers, fair value gaps, OBs, volume imbalance. How can I not have anything on here for mitigation blocks? Let's go with a bullish breaker. And then we're gonna let's give it a different color. What color are we gonna make this? We need a color that, man, we running out of colors, man. Colors. Let's use yellow. Colors. Then we're gonna call this a bullish mitigation block. We just gonna go with MB, Mr. MB. Who from Lauderdale remember Mr. MB, the boss man from Jam Pony. Mr. MB. That's what Slick Vic used to always say. Lakuja, Mr. MB, big, bad, templates, save as mitigato, daily, nope, daily bullish, daily, mitigato, Mr. MB. Save. Okay. So, and that's because no, that is a breaker actually. Right there. I didn't see this low right here. I missed this low right here. I was looking at this low right here. We came up. I was looking at this low. I mean, from this low here, we took off and then came down and we didn't break that low. But I didn't notice that low right there, right? This high broke that low. So that's a breaker. That's a breaker. Boom. Because I didn't see that low right there. I was slipping. Yes, I was. So we came up. We made a high. This high broke this low. And then we went back up, right? So that's actually a breaker. Right? That's a breaker right there. I was slipping. I was messing up. Yes, I was. I was messing up. I'm trying to. Okay. So we got a breaker below price 20 days back. We got a daily fair value gap below price 20 days back. We have an order block right here. All of this stuff is like really overlapping. We got an order block right, a daily order block right here. A daily bullish order block right here. Template. Bullish order block daily. Boom. So below price 20 days back, right? We got a daily fair value gap, a daily breaker, and a daily order block right there. All right. What else on the daily? Y'all see anything else on the daily that y'all want to point out that I'm missing? Do anybody see anything else on the daily that y'all want to point out? Technically, if you want to get technical, there is a mitigation block right here on the daily that I'm not going to mark out because this high failed to break this low, and then we got a thrust off, right? So this high failed to break this low, then we took off. So there is a daily mitigation block right there. But I'm not going to mark it out because I'm tired of putting stuff. We're just going to keep in mind that right pretty much at the top of this order block, a little bit. So the top of this order block is 38, 32, 50, right? And then the top of this mitigation block is, so what? The top of this order block is 38, 12, 75. So wait a minute. 38, 35, 25. So it's like, you know what I'm saying? 10 to 15 points above this order block is where the top of the mitigation block is, right? We just gonna remember that because I don't feel like putting no more stuff in there, right? So that's what's below us on the 20-day look back. With the 40-day look back, we have this daily fair value gap. No, that's a little bit outside of, it's close enough for government work. We're gonna count that in the 40. That's actually out in the 60-day look back. In the 40-day look back, truly, we truly only have lows on the 40-day. If we're just gonna be truthful about the whole thing, we only have lows. We only got discount stuff also on the 40-day. Because if we go to, you know, and just actually bring it down. See, there's no high or anything. We're above, like this is price. When we get down below price, there's nothing above price 40 days back, right? If we truly go with like the true 40 days. If we want to count it close enough for government work, we have this fair value gap right there during the 40-day look back. But that's actually in the 60-day. So 60 days back, the highest high is right there. 60 days back. That's the highest high 60 days back. We do have a high right here within the 60 days, but within 40 days, we are above all of the PDAs 40 days back. We are above all of the PDAs 40 days back. So that means we're in a premium in Lil Timmy Rogers world. In Lil Timmy Rogers world, that means we are in an extreme premium, which is not a surprise because the market has been on steroids. Y'all know what I just thought about? Y'all know what I just thought about? We started doing this on the daily. We ain't even look at the we ain't even go look at how y'all got me slipping, man. We ain't even look at the monthly chart and the weekly chart or nothing. We ain't even go back to see where we at on the higher time. How y'all just gonna let me jump into that and not even go back? Let me look over here and see who in the chat. Oh, my mama in here. What's up, mama? Hey, baby. How you doing? Hey, we did lunch with my mama the other day. We had such a good time. We ate Jersey at Mike's. We ate Jersey at Mike's. What I do, mama? What you shake your head for? What you SMHs from? Broward County. You hear me? You feel my mama here represent Broward County. Just a dude from Fort Lauderdale, Florida. You hear me? Price is actually in a fair value gap to the left. Yes, we're in that fair value gap. That one that's in the 60-day. Your grandson. Oh, me shaking head about your grandson. Oh, you know how we do. You know what I'm saying? Can't put two Timothys in the house together. Okay, so looking at where we are on the monthly, we came down to this order block over here that we made back in get out my way ad. It's a 2-month order block that we made back in 2020 between September 2020 and October 2020. Came down, had the reaction off of there, and pushed up nicely. Then we opened up November, pulled back, got the pullback, and then the takeoff. You know what I'm saying? Because that was since we propelled off the order block, we were talking about how we was looking for the month to open up, get a pullback, and then push up. And then if y'all remember, I was like, I wanted a little bit more of a pullback than that, but look like that's all we're going to get for right now. And it still looked like that's all we're going to get for right now. We got the slight pullback, then we pushed up. Now, we've come. There's nothing there on the monthly. We've pushed through technically. This is an order block because we traded through and got a closure below that right there. So technically that is a monthly order block. And looking at where we are on that, we are above the mean threshold of that order block right now. So it's the order block looking a little disrespected, looking like we on the higher time frame that the market still may continue to push up. Not saying that we won't get a pullback. I would like to see a slight pullback this week to come take care of some of that gap work before proceeding up. But it's looking like the market wants this to be the low of the year. And hey, if that's the low of the year, let it be, because we're halfway through. We're almost halfway through November, right? And then all we got is December, and that can very well be the low of the year, right? I'm not saying that we won't break it again next year. Who knows? Maybe we will. But the market is looking like they want that to be the low of the year because we have pushed past 50% pushed past the mean threshold of this order block. And y'all already know when we disrespect 50% of it, I count that as a fail. It don't mean that it won't still do its job, but once we get past that mean threshold, it's my experience that 8 times out of 10 when we get past that mean threshold, that order block that's a non-factor. That's a non-factor. So looking at the weekly, we're gonna go down to the weekly. Okay, so on the weekly, again, y'all know we talked about that on the monthly. We came down to this area here. We pushed up, blue pass this fair value gap right here. Right. Once we started coming back up, because we had already tapped into it there. So once we started coming back up, we blew past it. Right. Came up. We stopped at this order block right here. This bearish order block right there. We stopped there for that week, and then we pushed down the next week. Right. Next week we came back down, and then last week that we just left, we came back up, and we're right at the mean threshold of this weekly order block. That's the weekly order block that we had marked out. We was like, we're inside this weekly order block, so we pretty much right around the mean threshold of that weekly order block right here. Right. So we came right to the mean threshold, right where I wanted to get. I was like, hey, I would like to see the spot get up to like this 400 level and stop there. You know what I'm saying? Boom, because that was the mean threshold of that order block. Hit that, pull back, give me a little reaction off of this order block right here. Come down at least to that order block there, and then take back off. That's what I would love to see. Right. So on the weekly, that's where we are there. That's all we're gonna look at on the weekly, because all the other PDAs are up higher. Everything else is below. We got that weekly info down now. Now let's turn this stuff back on and then go down to the daily. All right, so boom. So looking at what we marked already on the weekly charts, right? This the breaker. Wow, look at that. Wow, look at that. Y'all just seen that in real time. Remember when I said I would love to see us come down to this weekly order block right here, come down to the mean threshold, this weekly order block. Lo and behold, this breaker, the mean threshold of that breaker is in the exact same freaking spot. Close enough for government work, right? That breaker right there is the exact same spot as the mean threshold of that order block. Look at how this stuff stack on stack on stack on stack. You know what I'm saying? When you be looking at this stuff, that's why I went back. I was looking at all the I'm still looking at ICT video. I still ain't finished them. I can't remember where I'm at. I think I'm on I can't remember where I'm at, but I still ain't done yet. I still do the core content. I'm telling you, I be looking at them videos and trying to internalize them because I want to know everything. I don't want to be a one-trick pony. I want to know how to look at this market and understand where we at, understand why we doing it. I don't want to just have one trade and try to trade that trade and don't know why the market doing all this other stuff. Oh, they go my trade. Pew, shoot, make my money. I need to know. You can ask my mama. Ever since I was a kid, I need to know why it's working. I open stuff up to see why it's working, even though I can't put it back together right. I need to know why it's working. I've always been inquisitive, if you will. So let's go down to the dailies now. Let's go down to the dailies. Right there again, we hit that order block mean threshold. Now let's go to the dailies where we got to where, you know, I want to get some kind of reaction off of that mean threshold, that weekly order block that put us into this fair value gap that Marissa, the cousin Marissa, was talking about. Marissa, you the one in the Bahamas, ain't it? Are you the one in Bahamas? You the one somewhere, I think. If I'm wrong, I jolly pies. But if I'm right, what's going on? We're in this fair value gap right here. This daily fair value gap, and this daily fair value gap is also inside that weekly order block that we was talking about, right? Didn't quite hit the mean threshold of this fair value gap right there. So I'm going to leave that in play, right? I'm going to leave it in play because we have not hit the mean threshold of that bearish fair value gap. Right, so I'm gonna leave it in play because we hadn't hit 50% of it, and we're also inside that weekly order block. So now I'm counting it as, let me see on the order block. Let's go back to the weekly. All right, so if I look at the order block, right, go to the order block, boom, I'm counting it as the mean threshold of the order block, because we came further into the order block than the bearish order block weekly, right? We came further into the weekly order block, right? Because this is the mean threshold of the weekly order block, right? We came up to the mean threshold and then we got the slight reaction off of it. So that's why I'm counting the reaction off of the weekly order block, and that's why, you know what I'm saying, I'm removing the weekly because we still haven't hit the mean threshold of the daily, right? So boom, we got the reaction off the mean threshold of the weekly, right? So I'm gonna leave that there. Then we got buy side liquidity above here. Buy side liquidity. Let me see what kind of high that is. That's actually a monthly high. So I'm gonna mark it as a monthly high. Monthly box top. That's actually a monthly high right there. Okay, and then this right here is October, nothing lower than that. That's actually a monthly low also. That's a monthly low. I forgot to mark that out because that's an October low and there's nothing lower than that. So we're gonna mark it as a monthly low, monthly box bottom, right? So that's a low right there. Since we're up here in this premium, yes, we're in a nice premium from the top to the bottom of this box. This box is from September 13th. That's how y'all just seeing it in real time. I did not know that was September 13th, the high that we made from the last time. Remember the last time we drawed this out? All we doing is just reading the price action. But guess what? We keep doing. We keep going back to these same points because we're looking at the same price action. Okay, so September 13th, that's the high that we marked last time. It was a monthly high. Y'all see, I just went down. I was like, let me see what kind of high that is. I went up. Oh, that's a monthly high. Marked it. Say, hey, this is a low right here. That's 13. That's a monthly low. Then guess what? It's the exact same high and low that we marked out the last time. I ain't got a crystal ball. I ain't got to pretend nobody. I'm doing it right here in front of y'all. This stuff works. Okay, so boom, we're in a premium. As you see, we're in a nice premium right now, right? Like I said, we've been running hot. Everything, all the PD arrays been below us in the last 40 days. You know what I'm saying? The last 40 days back, all the PD arrays been below us. I was like, we're in a premium. That shouldn't surprise you that we're in premium because we've been running hot. You know what I'm saying? So everything is we're overcooking right now, right? We're overcooking. So, right, that's why. Like, if y'all shout out Zay, if y'all was on Zay Live yesterday, I was like, man, just peeking at the price action, looking at where we at. I would like to see us give me a red week next week, pop up in the beginning of the week, right? And then come back down and get some of this gap work. You know what I'm saying? We got a daily fair value gap right there in line with a breaker, right here with an order block, right there. You see what I'm saying? So let's just come on back down. You know what I'm saying? And just, if we feel this fair value gap, that'll put us at the mean threshold of this breaker, at the mean threshold of that weekly order block. You know what I'm saying? Right here at the mean threshold. Yeah, that's the breaker. I'm sorry. This weekly order block. And it'll put us right here at the top of this mitigation block. We got a whole lot of stuff right there that's lining up that would fit a beautiful narrative of popping up in the beginning of the week. Pop up in the beginning of the week, fill out this fair value gap, maybe even get froggy and take out this high. You know what I'm saying? Maybe even get froggy and take out this high, or get up here into this little tiny rejection block right here, throw on brakes and leave the high alone and then turn around. You know what I'm saying? This little rejection block up there. It's only one candle, so I'm not going to mark it as a rejection block. I like to see two equal body candles at least before I mark the rejection block, but it can be just one. You know what I'm saying? Because we got a nice little wick on there. You know what I'm saying? We got a nice little wick. But since it's not at least two candles, that's why I'm not marking it. I just personally like to see two equal body candles or more before I say, hey, that's a rejection block. But since we got such a long wick, I can see us coming up here, stopping right there, and then leaving those highs and then coming back down. But since we're in a huge, Manganius, nice premium, let's see how much of a premium we in right now. Let me open up my field, add some more. Where's the 62, 70? Man, we're in a nice print. We above 70. We right around ICT OTE for ICT is in between the 62 and the 79, right? That's optimum trade entry for ICT, right? We're right in a nice optimum trade entry to go short for ICT trading styles. We're right in a nice OTE entry. We've come up, we got the reaction off of that PDA. So for me, if I want the week to be bearish, I want to get a slight pop up in the beginning of the week and go down. You know what I'm saying? So let's pop up, hit this fair value gap, and then tickety tank it down to come back down here and get this gap work down here into this breaker. Let's do that. Let's do that, market. That's what I would like for you to do. If you don't want to do that, I am not mad at you. I will do whatever you say do, but that is what I want you to do. Let's look at the 4 hour, but I'm not going to mark anything right now since we got so much daily stuff marked out. I'm not going to mark anything on the 4 hour, but let's look at it again. Oh yeah, we got a nice liquidity void right here on the 4 hour. Real nice liquidity void on the 4 hour right here. So yeah, if we got up and got into this daily fair value gap right there, that will put us right back at this breaking market structure on the 4 hour. You know what I'm saying? That will put us into this the mean threshold of this fair value gap on the 4 hour. You know, so that'll be a nice place to go ahead and reverse. And looking at the 4 hour, we got a nice liquidity void right there on the 4 hour, bringing it back down. And if we got to this mitigation block right here on the 4 hour, we got a mitigation block right here. If we came back down there, that'll put us right there at that breaker, taking care of that fair value gap, even putting us to the top of this order block where this daily order block can do its job and block. I know y'all forgot about that one. The order block do the job and order block and then push us back off of there. Yeah, man. That's all the PDAs I'm going to mark out right now. And as far as like me wanting it to be a bearish week, us having PPI numbers on Tuesday, right? That would be a nice catalyst for the market to attack some PD arrays and move the market the way it want to go, right? Just say Monday let's say the Monday if the bullishness continues, right? Let's talk it out. Let's just say Monday we come out and the bullishness just continues. We just keep pushing up, right? Right? Just say we push up to the top of this fair value gap, the bullishness just take off and continue, right? So then Tuesday, when the PPI numbers come out, right? Let's say they come out and they be good. Bang! Take off and attack these highs, right? Attack this external liquidity up here, right? A lot of times when we have them good CPI and PPI numbers, the next day we end up giving it back. So let's say the numbers be good. Bang! We come attack this buy side liquidity. Now that we've taken buy side liquidity, let's go back down. Take this buy side liquidity up here, then come back down, hit this monthly buy side liquidity tie, come back down, right? And if I'm not mistaken, we had something right there. If I'm not mistaken, let's go back and check it. But if I'm not mistaken, right? Yes, we do. We have a weekly order block right there. When I said the daily breaker was the same thing as the weekly order block, if we come out and have good numbers and we take out these monthly highs and we come back down and stop right here at this weekly order block, that would be perfect. That would be perfect. And that would tie into the narrative of if we got good numbers this day, right? The numbers took off and we took out these highs because of the price action took off because we had good numbers the same way we had good numbers last week. And then after we get them good numbers, we take out this buy side liquidity, maybe even hit this volume imbalance right there. But I ain't worried about that right now. But just take out this external liquidity, then come back down to this weekly because we get to the premium monthly and pull back down and come back down to this order block right here. Let's run our fibs on the overall range. Yes, sir. Right there, equilibrium. That order block sitting right there, equilibrium. That would be perfect. Perfect. Hey, man. That's all I got, man. That's all I got. I yield my time. Let's go see what y'all talk about in the chat. How we let you do it? I got the mic. What's up, Aloysius, mom? How the Aloysius doing? Forget all that other stuff right now. Y'all, Marvison, get out of the way. What's up? How the Aloysius doing? Put it in the chat. Oh, you already said that. Look at him learning shit all over it. Yes, he got a negative test on Friday. Thank y'all for. Oh man, y'all clap it up. Y'all clap it up for Jesus Christ right now. If y'all believe in Jesus Christ, I do not jalapize for how I feel, but I am not meaning to offend you right now. I am celebrating my Lord and Savior because the little nephew Aloysius was sick and he's no longer sick. So y'all clap it up. Y'all clap it up. Man, I appreciate that. I appreciate that if y'all clapping right now. I told him getting back in the swing thing will be iffy, but it will happen. Yes, yes, yes. Yeah, look at my mama clapping. Look at my, hey, when y'all, hey, I'm going to tell y'all about my mama. My mama, I remember when my mama first got baptized when I was a kid. It kind of scared me half to death. I was a little girly little child. I was a mama. My daddy said, "Yeah, little mama's boy, you gonna make that boy be a sissy." But my mama was the person, the only person. I ain't gonna say the only real Christian in my family that I knew. I knew a whole lot of fake Christians. I knew we had a whole lot of gangsters in my family. But my mama was the only real Christian that I knew in my family. And through all her prayers, is like, you know what I'm saying? I was able to change my life in due time. So I thank you, mother. I love you dearly, baby. I love you dearly. That's all I got as far as the price action, man. And I don't see nothing else in the yes. I see you had already answered that. I'm sorry, I should have read the chat before I said that. Hey Robinson, why your hands white? Hey man, we've been on here for a long time. We've been on here for over an hour. I'm about to get. I love you too, baby. I'm about to get off. Hopefully I said something that was able to share like my thought process and able to like help enlighten somebody. When it comes to this trading and investing, Lil Timmy truly believe it's not about trying to find one setup. It's not about trying to um copy somebody else's style. It's all about learning how to read the tape and learning how to you know what I'm saying, anticipate stuff and then react to, you know what I'm saying, react to what the market's giving you. It's like have a bias, have a plan, and have a reactionary plan. In the military, we always had a plan and a reactionary plan. You know what I'm saying? If this happened, we're gonna do this. But if this happened, we're gonna do that. You know what I'm saying? When a frago come up, you got to shift. You know what I'm saying? Sometimes you anticipate the frago, sometimes you got to just react to the frago. You know what I'm saying? But hopefully I was able to help anybody out with just talking out my thoughts and going through the process of marking up my chart from scratch and letting y'all watch it. If I did help anybody, hit the like button. If I didn't help you, hit the like button anyway. Because if I ain't help you, why you still here? Hey man, what'd you say? I just got on here. Let's start all over again. Okay, Chess World. For Chess World, we're going to back up all over again. Chess World. We've been looking 20 days, 40 days back. We took out all the PDAs 20 days and 40 days back. That means we're in extreme premium right now. These are all the PDAs below us right now that we're looking to take out. My mind frame is let's pop up in the beginning of the week and then sell off and come back down and take care of some of this stuff right here. If that happens, I'll be happy, right? If we get good news in the beginning of the week, let's hope it propels us up to take out this external liquidity and then come back down and take care of this gap work. That's it in a nutshell. Thank you for tuning in. I'll see y'all tomorrow at 9 o'clock Eastern Standard Time. I'm over here talking like Robinson. What he said? Trying to be light-skinned like you. Let me turn my lights down. So we got some haters out there, man. Speaking of haters, I see somebody click a thumbs down on one of my videos. I don't care. I'll put it up for the people who need it. Maybe you didn't need it, you hater. Click another thumbs down. I could care less. I care nothing about the thumbs down or the thumbs up. Only reason I ask y'all to hit the thumbs up is because they say the algorithm like when y'all hit the thumbs up and it's short to more people. I want as many people as possible to get this free information so we'll stop spending hundreds and thousands of dollars on courses that we don't need. You already know the information. You just don't know you know the information. So get around like-minded people, get your confirmation from like-minded people, and stop spending your money on courses. Don't even pay me for a one-on-one. That's why I got my one-on-one calendar closed. Take your money and put it in the market. One day after I put up all the videos from the series, I may open up the one-on-one, but I'm lazy and I don't feel like working from nobody. Take the information, the free information, and apply it. It works. Trust me. I'm not a financial advisor or fiduciary. Nothing I say should be taken as financial advice. Investing involves considerable risk. Do your own research, and you should always consult a financial advisor before making any investment decisions. You hear me? And with that being said, man, I'm I say thanks, bro. You're a gap trader. Chess World, you must be new here. Hey, all I do is read the price action. That's all I do. I trade the price action. That's all I trade. By the way, thanks so much for those videos. You very welcome, Lou B. You're very welcome, Lou. No problem. I see y'all in the morning at 9 o'clock for the overnight price action. Until then, y'all be safe. Enjoy your family. Give yourself a brain break. Push away from the charts, push away from the market, stop binge watching them YouTube videos, hang out with your family, go see Wakanda Forever. I enjoyed it. It's 3 hours, but it don't feel like it's 3 hours. Have a good time. I'll see y'all in the morning at 9 o'clock. I appreciate y'all, man, except for Robinson. I'm gone.